We dig stuff out of the ground and the whole world wants it right now. What's in your focus right now?
Yeah, so we've been sort of scouring the market for some opportunities right now. Given the risks that are going on, there's a fair few things that will just kind of run their own course, and we believe mining stocks that are exposed to that EV market look quite attractive at the moment. We've had them on our watch list for a little while, and they've been just generally sort of cooling off, I'd say. And then we saw names like Pilbara, for example, Australia's largest lithium mine, and then Syrah, but it was a broader sector theme as well. Pull down to some key levels, mentioned that 200-day moving average. There was a lot of bid tone for those stocks around that area. And then, the last 3 or 4 days, you've really seen those accelerate. So there's still about 25 to 30% in a lot of those stocks up to their recent high. So very much a momentum play. You're getting in on a stock again that's up 600% in the last year with Pilbara. So, you're getting in on a hot sector, but lithium prices continue to remain at higher levels. Pilbara is continuing to sell it at auction at even higher than the premium market. So I do think it is a good play regardless.
Because that's the difference with a lot of the minerals, where a lot of it we're still trying to find it in order to dig it out of the ground, whereas these two are job ready to go. Why did they fall earlier this year? I mean, everyone's all ESG. So what happened in January, February? Just
a bit of a cool off, I believe. They did experience phenomenal growth over the December-November period, particularly Pilbara, and it was just a little bit of a cool off from that. Markets were quite hot at the time. If you recall, I think it was the first trading day of the year, we hit an all-time high. And in those markets where we're in a breakout market and the market's leading to all-time high, those high growth names are going to get even further extended. Then we saw the broader market pull back, so very high beta names. So that's just why you're seeing that. Again, with the market recovery, should create a bit of buoyancy for those. But the actual fundamentals of the company are not at great risk with the current issues being rising rates and the war. If anything, it's just going to exacerbate the demand for those materials and the supply chain issues as well.
So when you sit around having meetings, like a lot of people were in commodities anyway, just because it is an inflation play. So is this like an unexpected shot in the arm, just having these geopolitical risks in the background?
Yeah, a little bit so. So it was already a longer term theme with the economic recovery as well. They do quite well through COVID. So we had them through that period as well. But yeah, just I guess the themes that are playing out right now is just that supply shortage, particularly in that EV space. You're seeing Tesla lock in long-term contracts with a lot of Aussie miners. Syrah Resources is a good example. They've got a contract with Tesla, and they recently just did a capital raise, about 135 million, to expand their Louisiana project, which is actually the state next to Tesla's largest processing plant. So a bit of a strategic location there. They're taking it from Mozambique and then processing it in Louisiana, and becoming a little bit more of a vertically integrated company as well, which is in the EV space, supplying to both the US and Europe. That's kind of the plays that are going to be really attractive moving forward. Rather than just pulling it out of the ground and leaving it at that, selling it on, they're actually adding value at each process along the way.